Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Wednesday, and we're at the 18th of January, 2023, just getting on to 6:30 p.m. Central Time. Wow, what a day. So the market gets pretty much what it wants, and then the market turns around and goes into a mini crash in the stock market. It pulls down a number of other markets. So let me explain it. Retail sales fell in January. We had heard sales were weakening, and we got it, all right, down 1.1%. We then got PPI numbers, and they're weakening. So in the past, the market had looked for that to say, the Fed, they're not going to continue with these interest rate cuts, and that's bullish the stock indices. Well, to make a long story short, the bonds and the notes had stellar rallies. In fact, mortgage rates fell to 6.04% today. You heard me, 04, not 24, 6.04% on this news. But the stock market flipped. It's schizophrenic. It decided that, maybe that is bad news finally. It's starting to set in and demand is starting to weaken in the market. What I really think happened, and for those of you that get my morning subscriber video, I think it's so important that you heard what I was saying. We're either in bed in the stock indices or we're going to fail right here. I said it as clear as can be. I'll live with what I'm saying right there. And I said, you do nothing today. We have to wait and see what the market does. Well, to make a long story short, the markets are getting hurt. How hurt? We'll see in a minute. In the metal markets, they retreated too. Silver's a lot weaker than the gold market. The copper market, to me, still looks absolutely fine. In the foreign currency market, we're just sort of drifting along. In the energy markets, still very good. I mean, $84 in Brent is a good, solid number. You can't get away from that. So when we look at the gold, okay, going now into Thursday trade, the market is down not even 1%, down 0.63%, peaking back. And as I said, you got a big resistance area here. Wouldn't surprise me if you got to do some work in there. You can see how the market backed off. And when we put on the work, we still have a pattern of higher lows and higher highs. You have not lost the uptrend on the swing line. We then take a look at where we're at in relation to moving averages, and we're still bullish. We're still over the 18-day average of closes. The Bollinger Band was here. We broke away from it finally. Today was the first day where you broke from it. But did you do any real damage? Well, only if you lose the embedded reading. So if you get a settlement under 79 and that tomorrow, you don't want to be long. What do I think the pros are doing? I think they're buying it right now. I think they'll get out in the last, let's call it, at 12:30, they'll see in that central time, did you lose the embedded reading or not? If you did, I think they'll come out. If they don't, I think they'll stay with it. At the end of this, I'm going to put up my ad for the Enhanced Bollinger Band course. Folks, you got to pay attention to these things. You learn how the markets will back away in time from this type of action. The question is, what does it do from there? The gold-silver ratio, well, as you can see what that is doing, here the market is still staying over and climbing, which means silver is weaker than the dollar. And you see that here. And what did I just say to you as I got back from my vacation? You avoid trading whenever your Bollinger Bands get that narrow. You get all kinds of whipsaws and attempts at upside, attempts at downside. They rarely follow through. It's just consolidating, and that's what you're in right now. In copper, you haven't lost the embedded reading. I'm still in the bull camp in this market. Lose the embedded readings and out you go. But breaks in the market, yeah, I think the pros will use them to still buy that market. Platinum's in a downtrend until you take out today's high. You have, which is an outside day down, by the way. And if you've taken that course, you understand the importance of today's high. Lower highs, lower lows. I'd be surprised if the pros don't sell into the 1063.90 level, which stops over today's high. In the palladium, I've been in the bear camp. I think you could maybe get to the the lower Bollinger Band. Why? Because it's narrowing in so much. It's like silver. You don't have to go one way or the other very big. And in the dollar index, all you did is you've been bouncing off the lower Bollinger Band, but you're embedded. The rallies in this market, in my opinion, are going to get sold by the pros until the red line closes over 21. So Are we overdue in some of the markets for corrections? Absolutely. Are others still embedded? Absolutely. Is the stock market maybe gone a little too far? And again, I'm going to use the word schizophrenic. When it gets the news it wants, it breaks. It spends the whole time, or the analysts do, fighting the market saying, oh, no, the Fed is not going to go for all those interest rate hikes and so on. Then when the data weakens, which would agree with them, they drop the stock market. Now, if you don't agree with that, fine, but that's exactly what's going on right now, and you pay attention to all that. And of course, on a bear day like today, as they were in Davos, and I'm listening to all the bigwigs doing the talking, they're giving you the reasons why this market should back off. I can agree. I don't think in this recessionary type thinking that the market has big upside potential. I'm in that camp in the stock indices. However, I'm still in the camp that's bullish in the metal markets. So I'm still looking for the economy to be okay, but I think you're going to see weakening. So will some of the metals back off? Platinum, palladium? Yeah, to a degree you're going to see that, and certainly in silver. But in the gold, I'm still in the bull camp because I think if the dollar weakens, the gold goes to the upside. So I said, you want to pay attention to the enhanced Bollinger Band course. Take a look at this, please. Spend a little bit of time and learn. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.